Welcome to the Market Outlook video presented by Market Scholars. I'm your host, Brandon Van Zee. It's January 11th, 2024. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of Twitter or X. My handle is @BrandonVanZ. We really appreciate those of you that click like and repost on this Market Outlook content. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, here, once again, real quick, be aware that we are doing our sliding scale renewal discount for our premium members who joined us in 2018 and then renewed with us again in 2024. Most of your subscriptions are coming due here mid 2027. So we're doing this sliding scale discount again. We should have sent you an email if you were eligible for that on Saturday. So check your email, and if you don't see it there, if it's in your junk mail or something like that or accidentally deleted, feel free to reach out to us at support@marketscholars.com. But we do offer our best discount that we offer anybody, 25% off if you get that renewed here in January or February. So just a friendly reminder on that. All right, let's go ahead and pop on over to our heat map here today. Wanted to show you that today was kind of a tech-driven day. It was basically a flat day on the market, but there was an area that seemed to be a little greener than others, and that is in your upper left quadrant there, where you have stocks like Microsoft and Nvidia out of the Magnificent Seven closing in the green here today. But they weren't alone in that tech space. You had Broadcom, a very popular company these days, up 1.8% today. You had Palo Alto Networks up again. Remember when I was with you last a couple of days ago, Palo Alto had a good day then. It had another good day yesterday and another one today. I said keep your eye on that one because Tuesday night was when we had heard from the Twitter username, I guess you would say, of the SEC got hacked and was exclaiming that the Bitcoin ETF was made official and confirmed, and it was actually just somebody hacking into the SEC's Twitter account. So Palo Alto has had a great run of things this year or this week as a result of that. And by the way, speaking of the Bitcoin ETFs, if there was a story that drove today's price action, it probably was the official approval of the Bitcoin ETFs. It was just a day or two after the hack took place. So they were going to announce it anyway. It's just that they kind of jumped the gun with their Twitter hack there the other day. So some of those Bitcoin spot ETFs are now off and running. But Palo Alto had a very nice week as a result of some of that chaos. We also saw that ServiceNow was up 1.7%. Salesforce, remember Salesforce is in the Dow Jones Industrial Average. It was up 2.74% today. A nice day for it. Adobe was up over 1%. Oracle was up nearly 1%. So you can see a lot of those green areas of the market seem to be in that upper left there. Now, one key tech stock that was left out of the fun was Apple. They were down a touch today, down 0.32%. We had Google down 0.09%. Meta was down 0.22%, but Meta had one heck of a day yesterday. So they've been on a roll here lately from the Magnificent Seven perspective there. Speaking of which, other Magnificent Seven companies, Amazon was up 1%, and Tesla was down nearly 3% here today. In terms of other important movers now beyond the Magnificent Seven, I would say that Netflix certainly captures my attention, up about 3% today for the streaming provider there. Uber had a nice day. That's a stock that is inching towards all-time highs. It's been a couple of years since they were at all-time highs, but they've had a really strong run here in the last few months, up another 1.7% today. Seemed like some of those insurance companies were up today. Chubb, Travelers, and Progressive all in the green here today. Some of your consumer staples hung in there, like your cigarette stocks. Philip Morris and Altria, both closing higher today. I noticed they were both down here. I think it was yesterday. They were on my mailbox money post that I put on Twitter every day of stocks that are paying their dividends that day. So looks like they're snapping back a little bit after their dividend pay date there. Some of the discretionary stocks did okay. Nike was up 2%. We actually just looked at Nike as a sold put trade candidate in my class on Monday. There's TJX was up over 1%. Lennar continues its hot streak, up 1.2%. That was a company that increased its dividend by 33% the other day. That's a massive boost for those of you that don't follow that space too closely. So home building still working pretty nicely. We did see that some of the travel names did okay. Booking Holdings, that's the Priceline company, and then Las Vegas Sands up once again as they're still doing the Consumer Electronics Show out there in Vegas. Some of the healthcare stocks hung in there. Cardinal Health, which we actually talked about in my question and answer session today, an interesting way on how to manage a trade that's done really well. We bought Cardinal Health a couple of years ago and up 100% on it, or right around that level. And so we watched a company go from the cycle of undervalued to overvalued in a very short amount of time. So we talked through that conversation about how to handle a situation like that and what companies might be a good replacement if someone did decide to lock in some profits on that one. So if you are a premium member of Market Scholars, of course, you're welcome to check out my recording from my class today. It was 3.5 hours, as it oftentimes is. So remember, sometimes these videos here at night for the free YouTube video are a little bit short, but for those of you that want more content out of me, more than happy to provide that. 3.5 hours waiting for you there with today's class. In terms of some of the down movers now, the area that really caught my eye today was utilities. My gosh, they really got hit hard. Notice this kind of bunching of squares and rectangles in the lower right hand corner, rectangles, I should say, if I could spit it out. But the point is, I think you get the point, which is they're all red. My gosh, look at all of this. It's if I zoom in on utilities, here's a zoomed in view. You don't see a single stock that was up in the utility space in the S&P 500 today. And these are some pretty aggressive moves to the downside. We actually talked about PG&E a little bit today, talking about some of the California wildfires and some of the liabilities that those California utilities had. That stock was down 3% today. Of course, that was a news story from years ago, but it just happened to come up in conversation today. Duke Energy was down 2%. NextEra Energy down 2.5%. Wisconsin Energy down 4%. Con Ed down 3%. Some of you saw my post on Twitter yesterday about some of the power lines that were down and how many thousands and thousands of people have lost power as a result of these really nasty winter storms that we're seeing all across the country right now. But Con Ed was one of the specific names that I mentioned in that. So I do wonder if this down day for the utilities is partially due to those ugly storms and some of the recovery efforts that are needing to be made there. All right, let's go ahead and pop on over now to the main area of the platform to see what our breadth numbers were. As you can see, we had 217 stocks out of the S&P 500 that closed higher today. That was good for about 43%. So it was a pretty split decision day, but as I mentioned before, it seemed like it was the tech side of the equation that did a little bit better. Coming on over here now to the charts, you can see that I use chart 4B in my market forecast presentations. I believe David uses chart 4A. So if you're following along with my presentations, then I would encourage you, if you're a premium member that have access to all 50 of our charts, to follow along using chart 4B in this case. Today we had the S&P 500 down by 0.07%, so in other words, just barely. That's about as close to break even as you can get. But do notice that the little high tag was above today's candle. I think that is a 1-year high. It is. And so be aware that we did hit a new 52-week high on the S&P 500 today. We didn't have a 52-week closing high. Nonetheless, it was a new intraday high. And do keep in mind that we're not quite to an all-time high yet. If I pull up a 5-year chart here, you can see we're still about 1% away from all-time highs at 48.18. We're at 47.80 at the moment. So that could happen any day. It could happen tomorrow for all I know, right, as we go into the weekend. Today we had an inflation number. So there's always economic reports that the market might react to. And remember, we're about ready to get into earnings season as well. I think some of the banks start reporting tomorrow. So that could very well start driving some of that activity. So the S&P 500 basically flat today, but in the meantime, they did hit a new intraday 52-week high. You'll notice that the green line is back in the upper reversal zone on the market forecast technical indicator. So no surprise, the background color of the chart is green, telling us that we've got a strongly bullish posture there. Notice that the Dow Jones was up today by 0.04%. Keep in mind what I mentioned before, that Salesforce.com is a Dow component, and so that was one of the big movers that helped them get into the green here today. Notice that similar to the S&P 500, they hit a yearly high today. And in fact, with the Dow, I believe that is all-time highs. Let me just verify that with a 5-year chart. Yeah, you can see the high tag pulling up on our candle here at the moment. So all-time high for the Dow. Break out your party hats. Good times for all. Notice here that we do have green background color. And remember, for the Dow, we've had a bullish background color, or green background color, since basically November 2nd. We have not lost it along the way. This is the only chart where we can make that claim. You had a brief moment right there and a brief moment right there with the NASDAQ and the S&P 500 where it went to weekly bearish. And even right now, we still have that on the Russell 2000. But the Dow has been a green light the entire time since November 2nd. So if you've been using that as your posture setting mechanism, well done. It's been a heck of a run there for the Dow. And remember what I'd mentioned before when we were looking at the heat map, a lot of times people forget that there are no utilities in the Dow Jones Industrial Average. I think some people think of the Dow Jones as a stodgy old blue chip index, and so there's probably some utility exposure in there. But the truth is there's not. And the reason is because the Dow Jones has a separate utility index. And so it's been that way for eons as a result. So there are no utilities in the Dow Jones. And on a day like today, where it was clear that the utilities were by far and away the worst performing sector, it just allowed them to avoid any of the selling that would have been associated with that. Notice that both the S&P 500 and the Dow not only hit 52-week highs today, but both of them are above rising 30-day moving averages and have strongly bullish postures. Now on the bottom two charts, the NASDAQ was exactly flat today, basically up by less than 0.01%. So opened and closed at pretty much exactly the same place here today with a little bit of volatility along the way on an intraday basis. So they did not hit a new 52-week high like those other two that I mentioned, but they do remain above their rising 30-day moving average, and they do have that strongly bullish posture. Russell 2000 is the only one of these four charts that has a weekly bearish intermediate posture. Notice the green line is falling just a little bit here at the moment. But I'll mention the same thing that I said on Tuesday, which is before I get too aggressive with my bearishness on the small caps, I'd like to see it break that moving average. And so far, it hasn't proven a willingness to do that. Today, it went through the moving average, but it closed above it. So notice the moving average color on the Russell 2000 is still green. But we even saw that in factor-based swing trading class yesterday, that the low size factor has slipped in our rankings just a little bit. Let's take a look at the sectors, because I kind of want to show you the difference between the tech sector and the utilities here today, as that seemed to be kind of the extreme opposite ends of one another. We had technology up 0.5% today. Remember, the markets were flat, so that's a very good performance for one sector within the market, especially the most dominant sector within the market. So we're bouncing nicely up and off of that rising 30-day moving average right now on technology, and just shy of knocking out a new 52-week high for it. So that could very well happen tomorrow or early next week. Let's keep our eye on that possibility. So tech was our leader today. In fact, the only other sector that closed higher was energy. Energy was up 0.26%, but you will notice energy's chart doesn't look anything like technology. Energy's been one of the worst performing sectors here lately, and is really the only sector that's close to a 3-month low here at the moment. So it was up a little bit today, but that that really doesn't calm your nerves if you've got a lot of oil companies, because they've been down pretty aggressively for the last week, and today was just a whimper of a recovery there. They still have a strongly bearish posture, while technology still has a strongly bullish posture. And then I wanted to point out utilities here as well. So look at how badly utilities did today. They were down 2.33%. Easily the worst performing sector out there. In fact, the only sector that was down even 1%, and they were down over 2%. So a really ugly day for utilities. Not only was it bad on a percentage basis, and not only was every single utility stock in the S&P 500 lower today, but it was an important one from a technical analysis perspective as well, because we breached that 30-day moving average and actually pulled the moving average lower, right? Over here, when it went below the moving average, the moving average stayed yellow. Over here it's red. So here when it's yellow, it means the moving average is still going up. Here when it's red, it's telling you the moving average has been pulled down with this really ugly day that we had today. And of course, it has a strongly bearish posture here at the moment. All right, that's my 15 minutes. If you like these quick hitter videos, no need to do anything else. On the other hand, if you want to get me back on track with the hour-long presentations, I ask one thing out of you: click like for me there on Twitter. As long as we're up and over 100 likes, I'd be more than happy to do that for you next time around. Enjoy the NFL playoffs this weekend, unless you're in Detroit. Many of you know I'm a Rams fan, so very much looking forward to Sunday night. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.